Hey everybody, what's up? All right. So, let's go over the events of today. So, let's start off with stock market. We had those fears again. First of all, yesterday, just to recap, the Fed did not raise rates, but that was not expected. However, two more rate hikes on tap for this year. When that happened, we got some selling in the market yesterday. There was also a resumption of the trade war fears. Trump saying now he's going to raise the tariffs on China up to 25% from 10%, 200 billion. So that's ongoing. So far, very little, if any, tariff effect has been felt. Chinese economy growing at 6.8%. The U.S. economy in the second quarter growing over 4%. That's probably even going to be revised higher, okay? So today we opened again down, Dow Jones down about 170. I sent out an email to subscribers on the opening saying that sentiment was way too negative for any kind of a big sell-off. And sure enough, we rebounded. So that's that. I mean, the stock market is dealing with what I have explained already, two opposing conditions. One is, well, I guess you can say three now. Well, one is the interest rate fear, all right, which really should not be a fear at all because one of the functions of interest rates or one of the effects of rising rates is fiscal expansion. And, I've been saying that for a long time. Government is a net payer of interest. You raise rates. It is another item of spending. Okay, during the Reagan years, the first term of Reagan, the two largest spending items on the federal budget were defense and interest payments. And it's kind of like the same thing now, only Social Security is larger than defense. But if you combine defense vendor payments, those are payments going to defense contractors, and if you combine with that all the rest of the defense expenditures, such as the wars and special operations and military pay and all that, it far exceeds Social Security. And then you have interest on Treasury securities, interest that the government pays. That's all right. That flows to income. Now, not equally. I understand that. It doesn't go to everybody. Poor people don't own treasuries. So it is a kind of a welfare for the rich. But I'm not, that's a whole other discussion. I'm not going to get into that. So the stock market is fighting rate fears, but at the same time, you have strong economic growth. So you're in this kind of, I said it before, it's exactly the same sort of environment that we had in the 70s when you had inflation, but you had growth. And the Fed was raising interest rates at that time as well. So the stock market is in this kind of a pattern where over time, value will be restored. You see a lot of stocks now. By the way, there are a lot of stocks right now. I look at the market every day that are just kind of trading down to really, really attractive valuations. You still have some stocks that are very overvalued, but more and more of big names too, well-known stocks, trading down to very, very attractive valuations. All right, that's what's going on there. But, I got to talk about the dollar. I got to talk about gold. Dollar popped back up again today. Actually, over the last couple of days, we're back up over 95 on the dollar index. And we're in this range that has been in effect now basically since June, maybe May, okay? Low 94 to mid 95. Low 94 to mid 95. It hasn't really broken out. And individual currencies, pretty much the same thing, although when you look at some currencies, for example, the Canadian dollar has turned around. Or it is in the process of turning around, trading at 130. It was up at 133 just, a week and a half, 2 weeks ago when the Bank of Canada raised rates. And The Canadian dollar fell, but now it recovered all of that and then some. But we are still in this range. Now, as for gold, it's been a challenge, I have to tell you. Look, people are selling gold. The people who are selling gold are speculators. Gold producers themselves, gold producers have been net buyers of gold for a year. Net buyers of gold for a year. That's very, very unusual. Speculators are short gold. They're short gold. Large specs, hedge funds, futures funds, they're short by a record amount. If you look at gold's fundamentals, strong economy. Strong economy means wages are rising, job growth, people are earning more money, jewelry consumption is trending higher, investment consumption maybe not trending higher but stable. You got the inflation backdrop, all right? You have all that going on, plus dwindling mine production. Mine production is slated to drop now as far out as you can look, basically. So you have all that going on. You have speculators short gold. They've been selling gold. It's all technical. And with the dollar, we get back to these same arguments, folks. I have been parsing through every single website and Forex blog to try to see if there are any unique and different arguments out there that people are putting out. But it's the same thing, rising interest rates. Look, we had that story at 7 rate hikes. The dollar is still lower. By the way, that goes for gold too. You had 7 rate hikes. Gold went from 1,043 to 1,200, so it's still up about a little less than 20%. Can't use those arguments. They failed already. Anyway, tomorrow is the July jobs report that the BLS releases. I sent out my forecast already to MMT Trader subscribers. If you want to get a copy of that forecast, you better hurry up. Go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader, and I will send you that forecast because that is going to be another market-moving report. And let me repeat that as of September 1st, we're August 2nd now. As of September 1st, the MMT Trader report goes up to $195 per month. Current subscribers are not going to be affected. Your rate stays the same. I have people who bought in at $75 a month. I had people who bought in at $100. I had people who bought in at $125. I had people who bought in at $145. They all made smart moves. It's going to $195. If you were a former MMT Trader subscriber and you would like to get back on it, I will give you the rate that you paid when you were on it. So that's a very nice offer that I'm offering you. Go to pitbulleconomics.com, sign up for a 30-day free trial. If you were a former subscriber and like to get back on it, send me an email at mnorman@pitbulleconomics.com. All right, everybody, have a great evening. I'll see you tomorrow. Bye-bye.